Hi, thanks for joining me again. It's nice to be back. I haven't done a video for a little while. Now this is the chart we'll be looking at. I think you've probably seen the title of the video, so you know what we're talking about. We're talking about looking for what didn't happen. Because sometimes what you expect to happen doesn't happen. And when the response isn't as you expect, then you have to look at what didn't happen to help you understand what is actually happening. Now this is ASX stock, Australian Stock Exchange, WHC. You can see that the stock had been in quite a strong uptrend for quite a period of time. There's a period of bullish absorption through here. And a breakout above that. Now price was muscled down here. I know that from one of my other charts. My short chart sort of showed that. And price was pushed down here quite strongly. And there was a reaccumulation form through here. Now I'll zoom in a little bit. You can see the reaccumulation zone here. There was substantial buying right throughout this period. Price broke out. It came back and tested the breakout line. This is the breakout line here. Price pushed above the highs of the breakout. Came back. That was a secondary test of the breakout. And no supply was really drawn out, no serious supply, and price pushed higher again. When price got up to this level though, we had this bar form. Now that bar actually looks more like that. That's filling in the gap. And this was when a new variant was announced and the media went nuts. It was all negative media. The parent index, in this case the XJO or the S&P ASX 200 index, sliced lower. All the media was bad. But you can see that price closed off its lows for the day on very high volume, really quite high volume. But the next day was down in response. It did, however, hold on just to the lows of the previous bar. So there was some support there. Volume was still quite high. It's lower than the previous day, but if you look down here, volume was higher than almost every day prior to that. So volume was still quite high. So there was an element of support holding on at this breakout line. Now the next bar was only fractionally lower in the end. It did try to rise a little period during the day and it was pushed down. It traded briefly below the breakout line and closed back above it again. There's no doubt that some sort of support is forming here for me, but at the time the media was terribly bad. The parent index had been slicing lower for 3 days in a row. It was substantially lower. And the media about this stock individually, the online comments were very poor, especially on this bar that I'm highlighting at the moment. The traders were expecting price to continue lower, but I felt as though there was reasonable support in the market. This bar then formed and price tried to go higher but closed poorly back near the bottom of the bar. Now at that point you'd had 4 days down, but the market had held on for 3 days on quite good volumes and hadn't gone down any further. It had held on at the breakout line. The response wasn't as you might have expected. Price wasn't trading how people expected it would trade, and then the next bar was up in response, albeit on low volume. This is the market not doing what was expected. It's not doing what the parent index is doing, especially with strength in the background from here. Here, this is your strength in the background. This is your breakout. And this is price coming back because of an external reason. This was a new variant. News is bad. And the traders, the big professional traders, would just use that news to their advantage. So let's clear this up. I'll put some of those lines back quickly. Now on this bar, some support did come in, there's no doubt. I'll just make it look more like it should look, filling in the gap. And at the time, there's little doubt that these two bars in particular looked suspicious. They looked vulnerable. It looked like the market was preparing to go lower. But when it didn't, and price popped up the next day, then there was a little weird looking test, half an absorption bar. The market wasn't doing as expected. It wasn't breaking down. It had held on at the breakout line. This is a clear case of what hasn't happened. The market hasn't broken down, despite these two bars suggesting that heavy supply had come in and the market would break down in response. It didn't. Instead, price pushed out above the close of this bar and then tested and then pushed back up to the high of that bar. Now this is your really crucial level here. When price gets above this level, you know you're in clear air again. So in response, price worked its way up. Here's another one of those bars where price has closed poorly, but it's held on at the important level. Then you have another little test bar with a bit of a weird top on it, but that's what it is. It's mostly a test bar. And then price has accelerated higher in response. Now, this bar here looks terrible, but that was the 6-month announcement on Thursday this week. And you'll see my video if you look back at announcement day. Price pushed higher initially, then it was sliced lower in response, and then it closed back pretty much back where it was in this little range here. So that was the market doing its thing, and prices pushed up higher again today. So right here, the market did not do what it looked like it was going to do. Despite these two bars suggesting price may continue lower, it certainly didn't break down, and then, although it looked a bit vulnerable, it never did. It held on at the breakout line, and then it absorbed any supply that was being drawn out and then comfortably pushed higher. So hopefully you can understand that and understand what's happened in the market. And despite those bars looking like the market was going to push lower, the market was actually absorbing supply and doing further accumulation to some extent. And understanding what hasn't happened will sometimes help you understand what has happened. This is not really a true VSA or Wyckoff principle. This is what you do where you see a market hasn't responded as you expect. These two bars here, in particular this one, suggested the market was going lower. The poor close on pretty strong volume suggested the market was going to continue lower. And it didn't. The support held firm and price eventually broke out again and broke out above the important level as well. Okay. Hopefully that was worthwhile. Thanks for your time again. I'll do another video when I'm able. Thank you. See ya.